Good afternoon, everyone. I hope you all had a great day today. I'm going to go over the trades that I took, my daily plan, my reasoning behind it, and all of that. So first, I shared, as I do every day, my daily plan on StockTwits. So we'll go through all my posts throughout the day and explain my reasoning behind it. So if you saw, maybe not, I said yesterday on StockTwits that I was expecting about 39.50 about all the way up to I believe 39.80 to 90ish, that I wasn't really wanting to be active, and my reasoning was because I thought it was going to be choppy. And as we saw from the overnight session here, we came into here and just consolidated. It was very choppy in that area. And let me pull up a candlestick chart. That'll be much easier to see. So here was this overnight session that I was talking about, and it was just consolidation. To be more specific, in this area here. And why did I think it was going to be choppy, and why did it end up being choppy, was because of market structure. So if we look here, I have outlined in this blue extending rectangle single prints, also a little bit up here. So this market wants to come up and rebalance all this thin volume. You could see here on the TPO, hopefully you can at least, very thin volume or single prints. If I pull this up, it should be easier to see. There we are. So at this point I already removed these single prints, but this is the same area that we were just looking at. And we came into it, and this was that chop in the overnight session. So when we're rebalancing like that, you shouldn't expect one-way directional moves once we accept into it. Now, what could have also happened, maybe we peeked our head into this area and then rejected, which we actually did, but it was only a temporary pullback. Maybe trap some shorts and then rip it and balance. So that is that post. Now let's go to the next one. Let me just pull back up StockTwits. Here we are. And this is also something important to touch on. I posted this morning. Was you may have noticed that all my daily plans that I share so far contain a bull and a bear scenario. It's important to have no bias, whatever you may think politically or what's going on in the world. That doesn't matter. When you're coming into the market, you're looking at the charts, you're looking at the footprint, what market structure is telling you, and that's it. There's no reason to have bias either way, depending on what you're thinking, because the charts are not biased. Where were we? Okay. So this was my daily plan going into today. Pretty simple plan. I was looking to my drool long, if you will, was this bottom extending rectangle in green, and my drool short was up top in red. Now, in between, I have this sell zone and this long zone. And you can see I was cautious of this upper long zone and very cautious of this upper sell zone. And I believe I explained why I was cautious about this area in yesterday's video. So if you are curious as to why, you can find out there. So to explain my reasoning for longs in this areas, well, I don't have to explain this one because this was on change from yesterday. I explained this one. But this cautious long area, which did end up providing a nice long, which I will show, my reasoning for it was we had these relative equal lows here, here, and some here. So as I've discussed in plenty of videos already, that underneath lows are stop losses, and the market loves to run stop losses. So I was looking at a dip, underneath these lows into this area, and then for the footprint to confirm that there is a bid, that there is a market participant, market maker, however you would like to word it, that they are buying all the shares that are being sold because these longs have their stop losses underneath lows. And yeah, pretty straightforward plan. Bull scenario over here on the bottom, bear scenario on the top. So I then posted a daily footprint chart. So this is all on the daily. These are daily candles. I have a clean chart up here so you could reference clean footprint. I know some people were saying that I don't know whether it was frame quality or they were just having trouble seeing, so I'm trying to go slower and also kind of mark up what I am looking at. So back to this daily chart. How did I word this? I said, what does this distribution signal to you? If you're trading this, it's a must that you are cognizant of what market makers are doing, and I said how I will cover this today. So looking at the past few days' daily distributions, we have what looks to be a lowercase b. We had this large fall, I believe this was Friday, so ugly structure, which I talked about, a lot of single prints. The ones that we cleaned up this morning were in there, a little bit more in there, but towards the bottom you could see that there's a lot of volume done down here, and as well as even yesterday on Labor Day. So we had lots of contracts being soaked down here. Now, who's soaking that? Definitely not you or I. This is a larger market participant. Maybe they're unloading a short, or unloading a short, or maybe they're loading on a long. Doesn't really matter for us. We just need to know that there is a big position here. And what does that mean? That even more so validates this long zone. Why? Because before we go up, why wouldn't a market maker want to run everybody who's long here? Why wouldn't they want to run them out of positions, buy up their contracts, and then send it up? So I said this morning, I believe it was about an hour before the open, to pay attention to this. And that's actually exactly what happened in the morning. We opened up market open, dipped right into that zone, ran their stops, and then proceeded to rip, I believe, 40 or 50 points in the opposite direction. And this was the same thing. I said pay attention to value in the market structure. What is it trying to do? So again, I'm just going to pull up my actual TPO chart as it'll be easier to see. And what I was trying to point out was we have value area highs here, here, and here, lows. So you could see just in this rectangle we have lots of value areas. Now this value area high on this aggressive down sell was up here, but nonetheless my point in what I'm trying to make, along with that distribution that we're seeing on the footprint, we see that price likes to be down here. This is value, this is called balance. Market likes to be in balance, it likes to chop around balance, so you want to play the extremes, whether it be on the top or the bottom. Now to further address this, I was more looking to be on the bottom extremes, aka going long, just because of where we were trading. If you look at a daily chart, we've been selling a bit, so it's easier to look for a long than it is a short, at least I think personally. So continuing on with StockTwits. This is what I was talking about, that initial buy zone that I had. I believe, yep, right at open we dipped into it and ripped about 10 points. Now this isn't the trade that I ended up taking today, even though it was in an area that I was looking to long, just because I said I was cautious about it. I would rather stay on the sidelines and wait for my personal A+ setup. Nonetheless, this setup very nicely and offered you $500, at least a contract on the E-mini. So after that little bounce up is when the aggressive selling this morning started. And here we have just a 5-minute chart on footprint. So when this first candlestick that we're looking at here closes down here, look at all the volume in it. What happens when we close down here and all these people are positioned higher? All these people who bought are now forced to sell because their positions are underwater. So they're just adding fuel to the fire. Now, in this candle, this is likely people from the first candle here, either stopping out, maybe revenge trading, getting back in, and we fall again. We leave this pocket of volume. You could see very thin volume nodes in this area. And this is just all those people being liquidated out, and thick volume again right underneath, maybe them covering or selling the shares, hitting the stop losses, contracts rather, not shares. And just same thing, rinse and repeat, stops being ran, not enough buyers able to hold this market up at this moment. So I said eyes on this because we were going, at this point it looked very clear that we were going to come into our sell zone. But as I stress, zones, levels, they're just zones and levels until the footprint agrees with you. You want to see that a market maker, large market participant, whichever, is on your side and supporting your thesis. Carrying on, as I stressed here, there was no bid in sight, and we just continue down. And this is a 30-minute chart now, I believe, and you could see how thin the volume is in this area compared to up here. We have lots of volume thin, and this is now in the second sell zone. We overshot it, and this is me saying, wait until a bid comes. The volume down here in our buy zone is still very, very thin, meaning that there isn't anyone buying, or at least not buying enough yet to enter a trade. So hands off. And I just said here again, wait for a bid, no long. And we were one time framing on the TPO. I just wanted to point that out to everyone. If you're not familiar with one time framing, maybe I'll do a separate video just for TPOs if anyone is interested. But one-time framing, you definitely don't want to be catching a knife when we're one-time framing as we were. Now I brought up, if I remember correctly, this was, a daily chart. And now you could see, just what I was talking about before, you could see this B shape here. Someone accumulated a lot of contracts down here. You have from 40,000, 20,000 a change, 10,000 to very, very light volume. What does that mean? That means sellers are exhausted. Not only that, we have definitely the volume point of control down here, but a lot of volume down here. And as you can see, at the time of the screenshot, we started pulling up, and we have a selling imbalance down here. People are trying to low slam this, thinking it's going to go to zero. And what happens when we pull above? All these sellers are now underwater, and that's what gives us the fuel to go up and our signal to start looking for a long entry. So once those sellers were underwater, this was down here where they all were positioned. Let that 30-minute close. We get a nice bullish close over our zone, and then in the opening next 30-minute candle, we pull down and offer a beautiful entry signal there. And I believe I posted the footprint on this just to show I don't just talk or give my plans, I do take these trades. So this was the 30-minute looking at our buy zone, and you could see, as I just pointed out in the previous picture, how this candle closed with all of this volume underwater. So now my eyes were on my buy zone looking for a long. wait for this next 30-minute candle to open, we dip, and look at this, 10,800 contracts bought over 1,500, a huge buying imbalance, and sure enough, that was the rip. So I entered here, as I just showed, you could kind of see down here, at 38.99. I sold half at, or not half, about 25% in 10 points of profit. I've mentioned before that is what I always do. That's what I always did, is paying myself at 10 points and then letting the rest ride. As you build a bigger position size, you're able to let more contracts be runners, if you will. So about 20-25% at 10 points, and then I took half off at that cautious buy zone, just because it's still going to be respected. It is an order flow level. Half off there. I was looking to take half off at 45 and then exit into the single prints if we really got going. Now we didn't end up doing that, and I will show in a bit of how I managed the rest of this trade, but I hope my reasoning for entry made sense there. And let's continue on. And then later in the day, I'm still in this long. My stop is set at break even. As soon as I get my 10-point profit target, then my stop is moved to break even, and it's all smooth sailing. Whatever happens, happens. So as the 12:30 candle closed, you could see I posted this at 12:30 on the dot. I said, watch how this candle closes, because we started to dip again from the first buy area into the drool buy area, and you could see we have a zero print. I went over zero prints a little bit in this video, and I went into more depth about them in yesterday's recap. So we see that there's this exhaustion. This candle is about to close. I'm looking for it to close above a majority of the volume, so that would signal that we have not only exhaustion, but a large amount of the volume done in the candle underwater, giving fuel for the fire to go up. And same thing happened. So we had a good close, exhaustion. Now I'm looking to add back into my buy zone. Now we didn't get completely back into it, but the order flow, the footprint gave us clues that